In this video, I'm going to tell you if Dynamac Holdings is a good investment based on some analysis that I think you might find interesting. So, Dynamac is a pretty low-key company that most people don't know about, and the only reason I even know about it is because I have an investing newsletter that I'm subscribed to. If you want to check it out, I've linked it in the description. So, let's start with the background of Dynamac Holdings. So, Dynamac Holdings is a diverse company. They're in a lot of different businesses. It's from Singapore and it was started in 1990. They focus on building and setting up large structures that are used in the ocean by the oil and gas industry. So big structures like these ones that you're seeing right here. Now these structures include different types of large floating vessels and platforms that are, that help in producing, storing, and processing oil and gas. Now, if you were paying attention or if you've been observing the stock value of Dynamac Holdings, then you would notice that at the beginning of 2024, it actually started to drop a little bit. And this was mainly because the company issued what's called bonus warrants in mid-January. So shareholders as of January 15th received one bonus warrant for each share that they owned. These warrants allow shareholders to buy a Dynamac share for only 0.15 Singaporean dollars each, although they're not required to do so. So they have the right but not the obligation to buy these shares for only 0.15 Singaporean dollars. So for example, if you owned 100,000 shares of Dynamac on January 15th, you would have gotten 100,000 bonus warrants. With these warrants, you could buy 100,000 shares at 15 Singaporean cents per share. Since Dynamac shares are now worth around 42 Singaporean cents each, using these warrants could lead to a substantial profit. So the way these warrants work is that they can be exercised between 6 and 9 months after their listing date, specifically between July 23rd and August 2024. So during this period, shareholders can choose to exercise their warrants to buy shares at the favorable price or sell the warrants in the interim. The fundamental outlook for Dynamac remains pretty strong. That indicates that there's a lot of potential growth and profitability for investors who choose to exercise their warrants. Now, if you prefer to invest in companies like this, you're most likely what's called an asymmetric investor. Asymmetrical risk and reward looks like this, right? You either have big risk and small reward or small risk and big reward. And this is in contrast to, high risk, high reward, low risk, low reward. So this is the ideal situation that you want, right? You want low risk but high potential reward, because if you keep repeating that over and over again, in the long term, on average, you're going to make a lot of money. So an example of an investment that would not be considered asymmetric is something like Bitcoin, because Bitcoin is high risk, high reward. So you're not getting that asymmetry. Dynamac is asymmetric because of its low risk, high reward. Now, the reason it's low risk is because of the warrants that I mentioned earlier, where you get these bonus warrants for every share you already own. So because you are allowed to buy these shares later for a pretty cheap price of only 15 cents when it's currently worth 42 cents, you can already see that the risk here is quite low and you could definitely make some profit. If you want to stay up to date with the best investing opportunities based on asymmetry, then you should check out the investing newsletter that I learned all of this from. So this is the insider newsletter from a company called Capitalist Exploits, and this is the newsletter that I use to learn about all sorts of really low-key stocks that provide a lot of asymmetry, so very low risk but high potential reward. This is just a quick example of one of their newsletters and what it looks like. So they have all the sorts of information in their newsletters, and they've got images and they've got information. They include links and references to show you where they got their research from. It's really interesting to learn from it. It's not boring either. They keep it pretty interesting and fun. Really solid analysis as well. So it's not just fluff. A lot of newsletters will just give you very general information that you can just find from ChatGPT, but not with the insider newsletter. These guys are hardcore. The guy who actually writes it is Chris McFadden, and he really knows what he's doing. And they usually have a little bit of humor at the end as well. It's a very high quality investing service, and if you like honest, no BS investing tips and guidance, then I can basically guarantee that you're gonna love the Insider. If you actually look on their company's their ratings, their Trustpilot score, you can see that they have a 4.9, which is excellent, with over 440 reviews. It is a verified company, and they have almost all 5 stars, just a few 4 stars, and almost nothing below it. So it's a great company. Lots of new reviews as recent as just a few hours ago as well. You're gonna get professional investment ideas delivered straight to your inbox, and so you can see they have rational analysis. They include charts and graphs. People have lots of nice things to say about them, and the guys behind them are actually professional money managers. So they actually have their own investment firm called Glenorchy Capital, and they've worked at top companies like J.P. Morgan, Lehman Brothers, and Invesco. If you actually try it out, you're gonna get regular stock ideas, just like the one that I mentioned in this video. You're gonna get access to their idea database, so all the different oil and gas stocks that they've ever listed, companies that most people haven't heard of, but there's a lot of opportunity to make money with. You're gonna get that along with the rational analysis. You're also gonna get a 5-part video series where they take you through their entire investment process, like how they pick stocks, how they manage portfolios, how they decide when to sell something, and everything you need to make use of the service the way that it was intended. You're gonna get lots of guidance as well, but what you're not gonna get is advertising of other services like unicorn stock picks that go nowhere. They're not gonna spam your email with like random crypto or some garbage that doesn't actually work. You get all of this for just $1 for a 30-day trial. You can cancel at any time if you don't like it, but I think the value is absolutely insane and it's definitely worth trying out. Use the link in the description to take advantage of the 30-day trial for just $1 and thank me later.